Hey everyone, it's Alan Brochstein from 420 Investor and New Cannabis Ventures, and I'm here to talk about the cannabis market, the big news from last week, and starting with a little bit of a overview of the market. Well, first of all, I hope you survived. That was one wild week, and I wanted to just say congratulations if you made it through this week. So the cannabis market, as measured by the Global Cannabis Index, ended up declining a little over 4%. So second week in a row. So two big up weeks followed by two large but not quite as large downturns. And it's left us with 1 day left in the month, down I think 2% and change. So who knows how we'll end up. Either way, it's not. If we end up, it's not going to be up that much. If we end up down, it won't be down much either. But unfortunately, it could represent the 12th consecutive monthly decline. What a bummer. I wanted to talk to you just quickly. I haven't done this on these videos, but this is the New Cannabis Ventures Global Cannabis Stock Index. And I wanted to show you what happened. So we had put in a low on January 27th, and it closed right at the lows. And then the next day, Friday, January 28th, the American Cannabis Operators Index actually had a little bit of a divergence and put in its low that next day. But the Global Cannabis Index, which is broader and includes Canadian LPs and biotech and all sorts of things, ancillary, that one gapped down. It opened lower and traded lower and then rallied back for a small gain. And that had been the low, 26 even, the low. On Thursday, when the whole global equity markets were melting down, the global cannabis index opened below 26, so a new intraday low of 2570, and then it rallied back up. And unfortunately, the recovery wasn't as robust for the cannabis sector as it was for the overall market. But this is a 3-month chart, and you can see the 6-month chart. So we had a bigger lift in November. That was around the Nancy Mace legislation discussion, and this lift hasn't been quite as impressive, to say the least. So I continue to hope that a low is in, and a lot of people ask me what I think, and unfortunately I have to say I just hope it's in. I don't know. I don't have the same type of charting ability here, but I just wanted to show you this divergence. So the low was actually January 28th there instead of the 27th. But look what's happened since then. We didn't come anywhere near that low this week. So American Cannabis Operators Index, and you can see how to find it up there, has a lot of different names in it, and they tend to be either MSOs or single state operators, as well as a few CBD companies. And I think there's 18 companies in it right now. And so that one's been acting a little bit better, interestingly enough. So switching the camera back. So that was pretty much the market action last week. And if you read our newsletter last week, I talked about this upcoming earnings season. And I told my 420 investor community today in my weekend video, I really think this next week may set the tone for quite some time. Very important week. And we wrote last week about how the analyst numbers for 2022 have been coming down. And I think the real question isn't so much are they solid or could they come down more? My guess is they could come down more. The real question is, are investors prepared for this? What will the stocks do when we get this guidance? And so this week, the two largest cannabis companies in the world report, GTI on Tuesday morning and Curaleaf on Thursday afternoon. And so GTI doesn't guide, but Curaleaf does. And so we'll see, if that guidance is a little bit light of what is expected, and I think more importantly, what happens to the stocks if so. Of course, there's a lot of other factors, right? And I continue to think that what's going on in New Jersey is going to be a very important near-term factor as well. So at New Cannabis Ventures, in the weekly newsletter, we include links to the most important news of the week. This includes our own exclusive news, which is typically interviews or reviews of either the indices, which you'll see some of those next week, or our revenue tracker, or state market updates. And then we also, most of our content tends to be curated press releases, and then we pick the most important of those qualifying press releases. And so those press releases tend to be around capital raises, financial reporting, and M&A. So of course this week, it was a very quiet week. It was a short week, first of all, and we're heading right into earnings season, so people are a little bit quiet. They know they're going to say something soon. And on the curated press releases, there were just two. They were both earnings reports. One was IIPR, and honestly, I don't follow it that much. I love what they do for the industry, and I'm glad though to see that there's some competition. Their revenue was a little bit ahead of expectations. Their growth continues to be strong, and I just noticed the market seemed to react fairly well to it. That stock's down a lot year to date. I think about 30%, but it had a tremendous 2021. The one I paid more attention to was WM Technology, and that's one I had a very large position. I won't admit where I started, but I was glad I added to it where I added to it. And I'm talking about in my model portfolios. So in any event, that was a high conviction call of mine. I felt like the market was all prepared for really bad news. And the bad news fell in November. At that time, the company reduced its outlook for the fourth quarter, and it shared preliminary thoughts, it wasn't really guidance, on 2022. And so what was nice about this quarter is they actually beat their own guidance, and the outlook they provided for 2022 was a little bit above analyst expectations. So they're looking for 32 to 37% growth. There was something very interesting in the report, and I was kind of concerned how the market might react to that, but the company, their adjusted EBITDA outlook, they really broke it down nicely on the call, by the way, if you have access to that, was reduced rather substantially from what people had expected, as the company highlighted 3 specific initiatives as well as some unspecified initiatives that it characterized as growth investments for 2023 and beyond. And I listened to that. I kind of felt like they're doing the right thing, actually. And I think, as I told my subscribers at 420 Investors, short-term traders and investors, short-term, they don't like to see the lower EBITDA, but long-term investors should really like to see companies, rather than trying to just milk each revenue for the most profit you can get today, you should really think about, when you're building a business, creating the highest revenue and profit stream down the road. And I think that's, I'm not promising that that's what they're going to do, but that's what they're trying to do at WM Technology. But I'll go out and just say, I was interviewed by Seeking Alpha recently, and I talked about that stock, and I think that's one of the most compelling opportunities in the cannabis sector right now. And I've been talking a lot about it at New Cannabis Ventures. At 420 Investor recently. Not so much at New Cannabis Ventures. We did interview Chris Beals, the CEO, recently, so you can find that on the website. So those were the 2 curated press releases. And then in terms of exclusive content, it was kind of quiet. Carrie did an interview with Peter Caldini, the CEO of Acreage, and wow, people don't talk about Acreage anymore. And I've been noticing they have really turned that company around. It was really questionable what was going to happen. So Mr. Caldini explained how they did that. I thought it was a really interesting interview that kind of drove home, what it takes to turn around a company and the tough choices that they had to make to do this. And so it's a company that was, not really growing their revenue, and they're bleeding to death. And I'll let you listen to the interview or read our write-up. But long story short, they did it, and I think it's interesting. We did ask a question, and I wasn't entirely satisfied with. I hope to get maybe a more dynamic answer, but we asked them specifically how the Canopy growth relationship helps or hinders the company. He didn't want to talk about the hinder part, go figure, but he did talk about the help part. So, from my, I don't really follow Acreage that closely, and I think, wow, 2 stocks, the fixed and the floating, that's confusing enough to scare everybody away, but then being tethered to Canopy growth, that's a whole nother problem. I think I just wanted to hear, do they have regret? I mean, he wasn't there when they did that deal. Do they have regret that they married Canopy Growth? I know how I would answer it, but he didn't really want to go there. And then the other one, just ahead of earnings season, as I mentioned, this is a really important earnings season. We wrote about it last week. And I wrote it's typically monthly, but I think I'll do another one in mid-March, given the number of companies reporting. But we did our revenue tracker review, and this really juxtaposed how terrible things are going for the very largest LPs, because obviously Canopy and Aurora just reported. And we've seen reports in the U.S., and they've been mixed. You know, we saw Scotts Miracle-Gro down 38% year over year in its Hawthorne business, but other reports have been good. One of the things I talked about was that MedMen report that they didn't issue a press release and nobody's talked about it, but I did talk about that as well. So there have been a few reports already: Turning Point Brands, Diamond Technologies, Scotts Miracle-Gro, MedMen. Might have missed one. But there's a bunch coming up, and we did provide a little bit of color about what the analysts are expecting there. Now let me conclude by just talking about this week's, in the newsletter, what our editorial slant this week. And so this is not a new topic, really. We've talked for many times about the weak capital structures in Canada. And this is something that's been playing out for quite some time. And I didn't want to get into it in the newsletter, but it's not just the largest LPs. It's also some smaller ones. I mean, recently we've seen Decibel, which I think is doing a really good job in their business. They found a Alberta-based credit union and refinanced all of their debt. So that was good news. And we also saw the same thing from Delta 9. These things, nobody's talking about them. They haven't helped the stocks, that's for sure. But wow, it seemed like this was something really hanging over the heads of those companies, and they fixed it. And I get questions a lot, whether it's on Twitter or elsewhere. Why is Oxley under so much pressure? And I actually don't think they have a real debt problem. Their debt is with Imperial, but maybe people are fearful of a take under or something, convert the debt to equity at a low price. I don't know, but in any event, there are a lot of LPs that continue to struggle with debt, and three of them, Aurora, Tilray, and Canopy Growth. Of course, Hexo too, but I don't want to even go there. So I talked about something that I have not seen widely discussed, which was how aggressive Aurora was with their at-the-money, it's called, program, or ATM. And they disclosed this in their press release very tersely, and obviously in their 10Q filing they filed with the SEC. Now I'm confused. Canopy files with the SEC. I don't think Aurora does. They described in their filing how they diluted by 10%. They raised they raised 90 million US. I was going to say 120, but 100 and something million Canadian. 10% of their shares were issued at US 455. And so if you look at the chart, in January, you can see what they did to the stock. And so they have cash, but they also have debt. Their debt's not due for, I think, until 2025. But this debt can really kill a company, and it can drive them into M&A, or like Supreme. They had to deal with their debt, and then they had to go be acquired. So I think Aurora, being so aggressive with their ATM, was really just trying to stay alive for a long time. And so investors are going to become increasingly concerned by these companies, which in some cases have negative growth rates and operating losses, like Aurora, like Canopy. And Tilray, not the exact same situation, but a lot of debt relative to cash, a lot of debt relative to EBITDA, if there's even EBITDA. And so as time goes on, these companies are going to have a hard time getting people to do mergers with them, or ultimately paying off that debt. So they get proactive like Aurora did. So I looked at Canopy. That's the easy one. Really sick patient here in terms of its balance sheet. And so I talked about that. Tilray is not as in bad a condition, but it's an issue. And I think the way to think about Tilray is, they have very aggressive M&A plans. And to do M&A, you need to either issue shares or cash, right? These companies don't join you for free. And so they got the share authorization. They can issue shares theoretically and do some M&A, but do people really want to take their shares if they know all this debt is coming up? And so we interviewed Irwin Simon, the CEO, 6 months ago, and the stock price then was, I want to say, $16, and now it's $6. So it's gone down a lot. They have convertible notes due in 2023. Those are the old Tilray converts. They got to pay that off. And then they have the old Aurora notes that are due in 2024, 1120 conversion price. So theoretically, if they address their balance sheet issues, they don't really have enough cash to pay that debt off. So that's really the issue, right? They have a certain amount of cash, but it would be all gone if they paid off the debt that's the Tilray debt that's due in 2023. So they kind of need to do something, and they're telling the world they want to do M&A. So I think they need to solve this debt problem. And so it seems to me, so historically, both Tilray, right before that deal was closed, and then the predecessor of Aurora, both of them went to debt holders and did swaps. And so they issued shares to get the debt paid off, and they kind of met in the middle. So, maybe they can do that again, Tilray. Maybe they just go sell shares and pay off the debt or build up enough cash so that people can see that there's no financial problem. So as an investor, you need to be aware of this stuff. So that's what we talked about this week, kind of the potential for some of these large LPs to raise equity. So with that, I'm going to wish everybody the best in the week ahead, and especially GTI and Curaleaf that are reporting this week, along with other companies as well. Take care.